is the entire real estate bears are eyeing on. So this neckline zone is extremely important. But first of all, we have to understand though, in this head and shoulder formation, it's never easy. There's going to be a whole lot of shenanigans and traps that is going to occur in that vicinity. This is 2012. You see that? You will call this what? Left shoulder, head, right shoulder. What happens is, this is a neckline zone. It breaks below the neckline zone right here. Makes lower low. So what a lot of people want to do here when this happens, keep in mind this is 2011 actually. So we've just gone through, just a couple years back, we've just gone through 2009, 2008 financial crisis. People are extremely scared and people are extremely skittish and they fear that this market is not done. So what do you think people are going to start? And not to mention this market actually in 2008 and 9, market actually did crash with head and shoulder formation. Like official neckline retest coming down. It's probably because nobody was anticipating it. That's what the market does. If you're anticipating something, it's gonna do the opposite. I'm pretty sure in 2007, 2008 and 9, they weren't talking about head and shoulder formation. It probably came very famous because of people started looking at like what happened in 2008 and 9. That's probably why it was so famous, and that's why it probably never worked out afterwards. Because I remember I started trading in this market in 2008 and 9. I got really serious with the market during 2011, 12. And then I started sort of sharing some charts and stuff. 2012, 2013. I remember on social media such as Twitter and Stock Twitch, people were like not into technical analysis. You will not hear on like, you know, CNBC and these major TV mainstream media sources talking about some kind of like moving averages or head and shoulder patterns or support or pivot, nothing like that. It was sort of considered as sort of like a voodoo. Like what? Just because you draw a line, you think about like this. I'm not exaggerating.
2 hours later.
That's probably why it worked out in 2008 and 9 because everybody's looking at it. And then here, similar pattern occurred. And I remember I saw this and I got scared. I'm like, oh my God, this is the same thing that we saw in 2008 and 9. We broke the neckline and then it reversed back. You see the games that it played here.
Perfect.
2015, 16, this is where they called it like, they call this as like a mother of all trap or something like that after everybody missing out 2012 to 2016 bullish run. They looked at it was like the massive, like the worse than 2008 and 2009 type of pattern here. I think this was, 2015 and 16, I start to see a little bit of a technical analysis started coming about. Not a lot though. He started really hitting it, I think, close to like 2020, and after COVID, it really got popular. But I remember 2015 and 16, even on social media, everybody was looking at this as a major topping pattern. Major. They're like talking about all these, George Soros and all these billionaires they're building in the market. We're on a Titanic. That's the neckline right there. And that's left shoulder, big right head, and then right shoulder. Everybody, and I remember we took out the low. I remember this. And Nasdaq did like much bigger dip, and a lot of people were just freaking out. Even when we made the all-time highs, everybody was freaking out.
Perfect.
And then remember the Trump rally? That's the Trump rally. So head and shoulder never played out there, right? So again, look at this here. This is 2011. You see that vertical move. Why did we go vertical? It's because once that head and shoulder didn't play out, this is a market's way of leaving everybody behind.
Perfect.
Same thing happened in 2016. Just massive multi-year head and shoulder here, this one. Multi-year head and shoulder. Left shoulder, head, right shoulder here, right? Neckline here. And then look at that. We just went vertical. This is the Trump rally right here, 2016 to end 2-year run.
Perfect.
It's because everybody was thinking there's no way. There's no way this market isn't gonna see a minimum 20, 25, 30% crash. A lot of people are calling it we're gonna see, you know what I'm saying, 50% crash like 2008. Because remember, we just went through this bull run, 2012 low to 2015 peak. There's no way we get another run without a proper correction. That's what everybody's thinking, especially after the head and shoulder formation. We're on a Titanic. That was 2015 and 16. But it went vertical. The reason why it went vertical is it just trapped so many people. I feel like this is a lot smaller. It's not as big, as wide as 2015, 16. Not even close, of course. 2015, 16, it took years to build that. For bears to build that head and shoulder. 2011, it took months. Maybe, I believe it was 6 months, to form that. This is nearly just like a 1 month. So we got a smaller head and shoulder. That means the outcome, either downside or the upside, is gonna be a little bit more smaller outcome. So if this thing bounces early, we might have that vertical run, but it's not gonna be big vertical run like a 2016, 2017, or 2013 or 14 or something like that. But it could be, a couple months of run. Everybody's just gonna be blindsided, right? Like, what? I mean, after all that shenanigan? Are you serious? After 7 straight months? After gap up and fade, macho shenanigan, and shocking, dramatic fashion, you did all of that for what? Just so the market can go another vertical for another 2 months? That would be like this scenario 1, market bouncing early, right? And of course 620. And you must prepare for all possible scenario.